It's your first client, the books are a mess, and you have no idea where to start. In today's episode, I'm going to break down exactly where you should start and some of the pitfalls that we come across, as well as some pointers for asking good questions and getting the answers that you need. So let's dive in. A while back, I got a message on Facebook or Instagram, I don't remember which one, but someone said that they felt like they were about to panic. She was currently doing her first cleanup job and seeing a lot of personal payments come in while categorizing expenses. For example, car payments, insurance payments, random food purchases and groceries, etc., nail shops, hair salon visits, and much more. She was really confused and didn't really know how to handle this. So let's start there. First of all, when you bring on a new client and their books are a mess, you might be starting with categorizing transactions, but what I want you to do first actually is go to the balance sheet and look to see when the last time they reconciled cash was before you start categorizing expenses. That'll give you an idea of where you need to head next. If the bank account hasn't been reconciled and there's lots of outstanding transactions that actually also need to be categorized, that's more of a catch-up and should still be addressed, but I do like to go through the balance sheet first to see what's messy before you start adding more to the general ledger. So that's why I always start with the balance sheet, because number one, if your balance sheet is correct, you know you've captured everything. And if you are not comfortable with the balance sheet yet, then you probably, I hate to say it, but you don't need to be doing cleanups yet. You have to be very comfortable with the balance sheet and what the balance sheet means and all the accounts that are typically on a balance sheet and what type of balances they have and what kind of source documents they should have to verify. Otherwise, you're going to get yourself into a bigger mess than you should. So if you're not yet comfortable with balance sheets, hopefully this episode will help you some and help you identify areas that you need to brush up on before you start taking on cleanup jobs. So the thing about cleanups is each cleanup is different, but you will start to see some common themes. And sometimes, like I said, sometimes it's a cleanup and sometimes it's actually just a catch-up. So there is a difference. A cleanup is when there's history on the books, there's things that have been miscategorized, there's things on the balance sheet that shouldn't be there, there's mismatched payments and receivables that are really messy, a lot of old outstanding stuff that you know is probably not accurate. Then that's a cleanup. When you're cleaning up the AR and the AP and cleaning up old stale stuff on the reconciliation reports on the bank rec, that's a cleanup. If what you're doing is just coming in and categorizing lots and lots and lots of transactions that just haven't been kept up on, that's more of a catch-up. However, it can turn into a cleanup depending on how old everything is. So I wanted to kind of get that out of the way. So let's talk about where to start. Like I said, cash is where you definitely want to start. You want to check to see when the bank was last reconciled, like I said, and verify the most recent reconciliation report with the actual bank statement. In QuickBooks, there's an area on the reconciliation report that has outstanding deposits and outstanding payments. And that's where you want to focus your attention. You want to look at those past outstanding transactions, not the future ones, because QuickBooks likes to put future things on there as well. The past ones that are older, that you know might be duplicates or you think they might be duplicates, those are the things that you have to follow up on. Just reconciling the bank account isn't enough. You have to make sure that there's nothing old and outstanding on those reconciliation reports. So that's number one. Then you'll go to the portion where this person was at, checking the bank feeds. If there's a lot in the to be reviewed transactions, then you will start here if you've already looked at what the status is of the bank reconciliations. So you want to code those expenses first. You'll have lots of questions for the client. You want to compile them as you go for anything that you can't figure out on your own. And to address the question that this person had about all the transactions that appeared personal, this is where you might want to stop and have a conversation with the client about what is actually business expense and what isn't. And if they can produce proof that it was for business, then you'll categorize it as such. If you don't think that they can, I would put it in a separate account, either ask my accountant and address it all at once with them, or some sort of suspense account. Or you can just put it directly to owner's draws once you know that they can't produce proof that it was for business. So if you want to kind of dive deep on what is proof for business, go back to the episode I did with Andrew, because he's an IRS auditor. So we had a lot of tips on how to make sure that you have audit proof books in that regard. So if you get to the point where you have lots of deposits and you can't easily match them, you might need more information from the client, like deposit slips, to be able to apply them to the correct accounts receivable invoices. And you may even have to enter AR to record the revenue. So this is one of those things that we always assume that we should know the answer because this is our wheelhouse, this is our expertise. But 9 times out of 10, we still need more information from the client. So when you get stuck, jot it down, keep a spreadsheet or whatever as you're working through things with questions for the client so you don't have to remember them. And then at the end, you can work through as much as possible and then send them all the questions at once. Typically, we just haven't asked enough questions and haven't gotten enough details to really understand where things should go and what they are. So after the bank feeds are caught up, you want to obviously reconcile and verify that reconciliation report to the actual bank statement. And again, look at all the outstanding transactions to ensure that they're valid. And you may need help from the client with this as well. You can do your own recon with this, where anything old you look at and you're like, okay, well, that was from last year. It still shows as an outstanding check. Then I'm going to drill down and do some searching through QuickBooks or Xero on that particular amount to see if it's actually a duplicate, or drill into that vendor file to see if there's another invoice with that same date or near the same date with the same amount, things like that. So that's the part where the cleanup gets like, you have to be a detective. And if you don't understand, you don't know your way around QuickBooks or Xero, whichever system you're using, and you don't understand the balance sheet, maybe hold off on doing cleanups for now. So when cash is complete, move to the rest of the balance sheet accounts. Everything on the balance sheet you should be able to verify with supporting documents. So I'm going to go through some typical balance sheet accounts here and what the supporting document for that balance sheet account should be. So if we're starting on the asset side of the balance sheet from the top, we've already done cash, and that supporting document is the bank reconciliation report and the bank statement. And again, verify those outstanding things. Then you move on to AR, or accounts receivable, and your supporting document for that is your AR aging. So you want to print out an AR aging with the same ending date as the balance sheet that you're looking at and verify everything on that report. Now, this is one where you definitely need the client's input on once you've already done your own recon to make sure nothing is duplicated, right? So you can do your own research first to see if some of those outstanding invoices are actually duplicates, or if you've already received a payment from that client or customer and it just wasn't applied correctly. Or you can just give it straight to the client and say, please review this AR aging and check off anything that you know has been paid off the top of your head. And if you have an idea or proof of when that was paid, please send it over so that you can take care of it and get it off that AR aging. In most cases, it's probably not outstanding still. If they're super old, it's probably that the payment wasn't applied correctly when the deposit was received. So in that case, you're actually duplicating revenue, because an AR invoice was created, which books it to revenue. And then once they receive the money, when they booked the deposit, they probably recorded it straight to revenue. So you have 2 entries to revenue for that same amount. It's really important that your AR aging is accurate. After you've addressed the AR aging, you'll move on to inventory if they have it. And your supporting documentation for the inventory is actually a physical count. So you'll need to know, it's a timing thing too. So if you can, ask the client when their last physical count was, and then go back in time and run the balance sheet for that time and see if the amounts coincide. Now, this is another area that if you don't have inventory experience, then I would strongly recommend passing on clients that have inventory. So your physical count is going to be your supporting documentation for the inventory. Now, a common account in QuickBooks Online, which doesn't exist in Xero, is the undeposited funds account. What this account is, I really don't like it, but it's an account to hold money received that you haven't yet taken to the bank. And QuickBooks is set up to automatically utilize this account. So if you don't want to use this account, you have to turn it off. This is another account that definitely needs to be looked at. If there's a balance in it with lots of old stuff, you'll want to address everything. Most likely it's an issue with payments being misapplied or not recorded correctly when making deposits. So it's really hard to explain this one without a visual, but for this account, you'll want to go into QuickBooks Online and look at the actual chart of accounts section of the account and filter on anything that's unreconciled and start there.
We'll be back after a quick break.
This episode of the Ambitious Bookkeeper Podcast is sponsored by my brand new free training, The Ultimate Guide to Creating a Profitable Bookkeeping Business. In just 1 hour, you will learn 3 keys to creating and launching a profitable bookkeeping business. We will map out your path to creating a bookkeeping or accounting business that keeps you in control of your time, priorities, and expertise. From someone who built a 6-figure firm on part-time hours. That's right, you can stay in control of your time, keep family as your priority, and serve your clients well. It just takes a little strategy up front, and I'm going to help you with that during this free training. So head over to the show notes to sign up now for the next training and find out how you can choose the work you do, kick imposter syndrome to the curb, use tech to be super efficient, which all leads to a profitable business. Just head on over to ambitiousbookkeeper.com/training, and I will see you there. Your next account, which is also another QuickBooks Online account that's automatically set up and things get coded here automatically in bank feeds. Sometimes if people aren't paying attention and they're just accepting transactions, sometimes transfers actually get coded to this account. It's the uncategorized asset. And unfortunately, you can't actually turn this off in QuickBooks Online, which is a huge pet peeve of mine. There really should be nothing in this account. So if you are bringing on a client and you look at the overview of their QuickBooks, as an accountant, you have this section called Overview that you can see how many bank transactions they have that are unreconciled, when the last time they reconciled their bank account, and you can see if anything's been coded to uncategorized asset or is sitting in undeposited funds. Like I said, this should have nothing in it. So you need to go through every transaction in that account and move it to where it needs to be. Like I said, most of the time, they're actually transfers that are coded there, which is also an issue because now you're actually like duplicating transfer transactions and all sorts of stuff. So definitely go through that and move everything out of there to where it belongs. Your next account on the balance sheet is fixed assets. Again, not every client or customer is going to have fixed assets, but your supporting documentation for this account is a fixed asset ledger or a spreadsheet. So whether they're utilizing the fixed assets module inside of QuickBooks or Xero, or they have a outside spreadsheet, you should have something maintained that has all the details of every purchase that was in that account. If your client doesn't have this yet, you need to create it. So you need to create a spreadsheet or start using the fixed asset tracking module in the software that you're using. Make sure everything has a date of acquisition or a purchase date on it, the total amount, and this is all information you're going to get from running the detail on the general ledger. If you don't see anything in the current year in the general ledger, then you have to run it for all dates and just see what's sitting in there and making sure it's valid, right? A lot of times things get booked there that aren't actually accurate. And another verification you can do is asking the tax accountant for their depreciation schedule at year end, and you'll be able to see what they have coded as fixed assets. Then we have prepaid expenses. Again, not all businesses will use an account like this, but this is, for instance, if you are doing accrual financials and you prepay for your insurance or a software for an entire year, you would book that transaction into a prepaid expense account and amortize it over every month. So for instance, for our clients, a lot of them buy annual subscriptions for software because it's a better deal. And we actually amortize them and expense them out every month so that they can see what they're actually spending per month on that software, especially if they used to pay for it monthly and now they're not. We can actually show them your software expenses are lower this year because you did a lot of annual subscriptions. And again, it's an amortization schedule. So basically just a spreadsheet. You want to track when things were purchased and then create a column for each month and see what the expense should be. And then the ending balance should match the balance sheet if you've recorded all of your journal entries. Moving on, I think that pretty much covers assets. So now we're going into liabilities. Your accounts payable is generally one of your first liabilities or credit cards. So we'll start with accounts payable. Again, just like AR, your verification, your supporting documentation for AP is your AP aging. So again, run an AP aging for the same date as of the balance sheet end date that you're looking at and verify that everything that's sitting on that report is valid. You can do your own reconnaissance and look at the vendor files or see if there's duplicates, but it might be quicker to just send that report over to the client and ask them to let you know if all of these are valid. And if they have no idea, your next step is actually to reach out to each of those vendors and ask them if they show any open receivables on their end for you. So if they're a vendor, then on their side, it's going to show as a receivable. So that would be the next step on cleaning an AP aging up. After that, we have credit cards. Your verification for that is a credit card statement and a reconciliation report. You should be reconciling your credit cards exactly the same way you do your bank accounts. So the same process there, you look at the reconciliation report and verify anything old and outstanding, whether or not it's a duplicate or if it's valid. For credit cards, there really should not be anything old and outstanding. There may be something that hits at the very end of the month that shows outstanding that doesn't clear till the following month. But other than that, you shouldn't have anything old and outstanding, and your balances should match the credit card statement. Also in liabilities, obviously we have loans. So there's a couple different facets of loans here. You have short-term and long-term. And you also might have a loan to a shareholder or something like that. Every loan on the balance sheet needs to have a loan statement or a note. So if they are lending the company money or the company's lending them money, either way, there needs to be a note on file with an established interest rate and all that good stuff. If they have a mortgage or a car loan, make sure that that's actually in the name of the business and ask for the statement and start recording so that you can record the principal and interest correctly. And I also like to create a loan amortization schedule in a spreadsheet in addition to having that loan statement so that in case you don't get the statement every month, you can figure out what the interest is without looking at a statement. And then the rest of the balance sheet is equity. So I still like to look through the equity accounts to make sure nothing got coded there inadvertently that isn't actually an equity transaction. So nothing should be hitting retained earnings through journal entries or transactions. That should only be your revenue or your income from the prior year gets closed out to retained earnings or your loss. Your owner's draws and owner's contributions, I would look through that account with a fine-tooth comb to make sure it's accurate. You don't necessarily need a supporting documentation for that if you've just looked through it and you stay on top of it. So that should be something that you look at every month to make sure the balance isn't changing on retained earnings and the balance in owner's equity isn't changing other than the amount they're drawing out, or if they are purchasing things on their personal card or their personal bank account, but they're actually business expenses, you would book those to owner's contribution. So that's my quick rundown of the balance sheet and the supporting documentation that you should have for each of those accounts. Again, not every business uses every one of those accounts. Some businesses have different and other balance sheet accounts, but for the most part, that pretty much covers most small businesses. So like I said, start with cash and then go through the rest of the balance sheet line by line and make sure you can verify the balances. If you can't verify the balances with the source documentation, ask questions. If there is no source documentation yet, create one. So like for prepaid expenses or for the fixed asset ledger, create the source document and keep track of it for them. There's some that they need to request from banks, like loan statements and things like that. And some things you might just need to have a conversation with them about what exactly are these transactions and where should they go. So now let's talk about getting into the expenses. So this is another area where you can do a lot of the legwork yourself by Googling things if you don't know what the expense is for. But if it's clear that it might be a personal expense, then you need to have a conversation with the client. They might not really understand. There's a lot of information floating around about like running your own business allows you to deduct all sorts of stuff. And it's just, some of it's just not true. And they've been misled. So it's your job as the bookkeeper, you're the first line of defense, to educate them on what is actually a business expense and what isn't. And sometimes there's a gray area and you just really do need to have a conversation with them and hear their side of why they think it's a business expense. As far as receipts go, it's ultimately up to the client to keep their own proof and backup for all of this stuff. But as a bookkeeper, I will say that they do rely on us to do a lot of that for them. So have the discussion with them too around, do you want me to bug you for receipts? Or are you okay with not having receipts for things and potentially having them denied in the future? That's really up to them. But whatever they decide, just document it in their file and go forward with that. I think that's pretty much all I have on this episode. I hope this was helpful for you. If you are new to bookkeeping and you don't know the first thing about a balance sheet, please don't take on cleanup jobs. Only catch up. But even then, sometimes you think it's going to be a catch up, but you get in there and things are kind of messy. So I would say the only true catch up is if you are creating the QuickBooks file for them and entering all the transactions from their bank statements. Other than that, if they have an existing file, you're most likely going to run into a cleanup situation, and you should refer that out to someone else if you're not comfortable with balance sheets and doing research and all that kind of stuff. If you are not brand new to bookkeeping and this was all information you already knew, great. I'm super excited. I would love to hear about it because we need more people like you out there willing to share and mentor bookkeepers that don't know these things yet. So let me know, tag me on Instagram when you listen to this episode. I hope it was helpful. If you are a student of mine, this information is inside of our program, the Bookkeeping Business Accelerator. And I also go really deep on how to do a diagnostic and get going on a cleanup. And I demo this whole process. So if that's something you're interested in, you can go to ambitiousbookkeeper.com/BBA. BBA is always enrolling on self-paced, and a few times a year we open it up for a live cohort with extra coaching and co-working sessions. And if that's something you're interested in, go to ambitiousbookkeeper.com/waitlist to be notified when we are opening the doors for that again. And I will talk to you in the next episode.
ambitious.